Nigeria became an easier place to do business, jumping the most among Africa's biggest economies in the World Bank's Doing Business ranking. The oil producer improved its position by 24 places, but is still rated 145th out of the 190 countries. Or Chief Economist at Advertiva Capital Management Limited, Michael Famoroti, is in the studio to talk where investment will be heading with this news that we just got this week. Many thanks for your time, Michael.
Thank you.
Yes, it's a very good one, I must say, for this latest report that we have, especially what the government is doing with the initiative, Ease of Doing Business initiative. But first off, what's the implication of this as an economist? Tell us.
Well, I think the first thing really is to commend the Presidential Enabling Business Environment Council, PEBEC, on the work, because their target was to move us 20 places, and it's worth saying that, you know, they did beat that target. And on its own, that just shows that policy can have effects. They were very strategic about how they went about trying to meet the target, and that has really paid off. So for me, the first thing that it really shows is that confidence in policy makers is not entirely misplaced, as where there's a will and there's a strategy, we clearly can get it done.
Yeah, exactly, with this that we have now. And of course, it's going to spur more confidence, renewed confidence in the economy. Yes, let's go straight to the point now. Why do you think, what sectors do you think investors would be looking at? Because I know there would be a lot of FPI inflows and FDIs inflows into the economy anytime soon, more of it. So what do you think investors will be looking at, talking about the sectors in the economy?
Yeah, so the Ease of Doing Business ranking itself focuses on SMEs, smaller businesses. I think a lot of investment that we would be expecting to see are probably larger scale industries. I think the key there is looking at where the potential for growth is and looking at where government policy is supportive. Just taking some examples, you look at the oil palm sector, which has enjoyed a lot of growth domestically in the last 18 months because of the CBN's FX policy. And that is an example of an area that policy has supported. You look at industries or areas that naturally grow when you have a young and growing population, and those give you indications of where FDI can be attractive.
All right, but what about the agriculture sector? I know you talked about the oil palm, but that sector is one sector that, if we're talking about diversification, is one area the government is looking at. Do you think there will be any form of investment? I know within, locally, we're doing so much, but what about from out?
Yeah, so in terms of the growth of that sector, I think if you ask most people, the expectation is that it should be one of the star performers in the medium term, really. And like you said, there is a lot of domestic critical mass already, and that is a positive because we do need our local entrepreneurs, both small scale and large scale, to help grow that industry. But it is an attractive one for anybody, really, whether foreign or domestic. The key there really for foreign investment is how supportive will policy be in the medium term of foreign capital coming into that area. I already mentioned, obviously, the CBN's FX policy, which is focused more on importing the raw material of oil palm, but this is probably a time to be slightly more cautious in terms of trying to anticipate where policy will be in that area, primarily because for the federal governments, the agriculture play is very close to their heart and is very much a domestically driven one.
All right, Michael, we'll have to take a break now, but when we come back, one sector that's of course been driving this economy is the oil sector. We do not know if investors will still be interested in that sector, but we'll talk more about that after the break on Business Tonight. Michael is still in the studio with me, and we've been talking about the World Bank's Doing Business ranking for Nigeria, and of course where investment will be tilted now with this report. Yes, we got that report from the Nigerian stock market, but first off, let's focus on the oil sector. Yes, oil price has been on the rise since we have it, and with the InfoWare terminal report data that we have, the oil share index has been moving along in that trend. But it's not been so good with the oil sector at the Nigerian stock market, just like that. I don't know if it's because of the suspension of the Oando shares, technical suspension, but generally, do you think investors will be looking at the oil sector in Nigeria?
Okay, so there's a lot of different bits and pieces moving around. In terms of the oil sector on the stock exchange, we have a sort of divide between the downstream players, so the guys that sell PMS, diesel, and so on, and the upstream players like Seplat, who actually lift and export crude oil. We've seen stronger oil prices in 2017 compared to last year, and that has helped firms like Seplat, which is actually the heaviest weighted on the oil and gas index. They are currently trading at, I think, their year high of somewhere around 425 naira a share. And they've been helped by the fact that prices have been strong and Focado's terminal has come up in the last couple of months. The story has actually been different for the downstream guys, because when you consider it, although high crude oil prices are good for us as a country, the downstream players like Total, like Mobil, like Oando, they normally would import crude oil or PMS, and the price of that depends on global crude oil prices. So when crude prices are actually higher, their costs go up, right? So that's why we've seen a lot of weakness across the downstream players, which are the bulk of the market. You mentioned Total, you mentioned Oando, and so on. So that's why we've seen a bit of weakness for them. At the same time, petrol prices at the pump are regulated, so they don't have much room to actually shift prices either. So their margins have been squeezed, and what we've seen this year is, rather than imports, because the price is just really high, they've depended on NNPC, and NNPC sells at a particular rate.
Okay, but with this ranking, do you think companies like that want to look or invest in the upstream?
Well, so investing in
it's
the
a big
upstream
question.
space is it goes beyond ease of doing business, really, because the key there is regulation, right? So the petroleum industry bill, which is of course something that's very topical. We have seen the petroleum industry governance bill, which is one element of that. That is still sort of sitting with the presidency, but until you unlock the regulation in that space, you're unlikely to see the level of investment that it's crying out for. At the same time, you have to look at where global crude prices are going to be in the future, because whilst they're high at $61 per barrel, just last January they were about $27 a barrel, and upstream projects are long-term by nature. So it is the trend in the next 5-10 years that will determine the sort of play we get there, as well as how quickly people think the regulation will be passed.
All right, just before we go into the Nigerian stock market and see where investors, with this latest report, investors will, or what shares they will be buying, we'll see that the Brent, against which half of the world's oil is priced, increased to $61.32 a barrel, up around 37% from its 2017 low hit in June. Now, traders and brokers say investors were adjusting positions after price rises of around 5% in October. Well, however, NSE oil and gas sector does not appear to correlate with the OPEC basket. Well, as I said earlier, this might largely be due to the issues surrounding the Oando crisis there, but because it was suspended by the NSE and the Johannesburg Stock Exchange. Now, the U.S. crude exports have jumped close to 2 million barrels per day, and production has risen almost 13% since mid-2016 to 9.5 million barrels per day. Well, investors are saying the problem, or analysts, is as soon as prices move up, it's too easy for the U.S. producers to add another rig or another completion crew. Yes, this OPEC extension court, production court for Nigeria and for Libya, countries like Libya, has so far helped Nigeria. But do you think we would be further exempted? Because I know there's going to be another meeting next March. Are we likely to be, the extension, would it continue for Nigeria? Because I know we're still relying on the earnings from oil. Yeah,
so that's a really important question, really, because the agreement at the last meeting was that Nigeria can stabilize production at these levels or somewhere around these levels by March, if there are no volume shocks, which is another thing that I'll come to. If there are no shocks, then we would have had stable production for about 6 months. Again, depending on where oil prices are and where global supply stocks are, some OPEC countries might be more aggressive in putting pressure on us to join the cut. Our hope
that would
is
be
that,
very good.
Yeah, our hope is that that is something that doesn't happen, but it's something that the Ministry of Petroleum would probably be accounting for right now, given that volumes have been quite strong. But just a quick comment, because like I said, this is all contingent on volumes being around where they are. There's been a bit of murmur in the market about resumption of militancy in
attacks.
the
Well,
Niger Delta.
I read a report somewhere. Hopefully, it's not really true.
Yeah, but that's something that would completely change the dynamics of production. If it escalates, becomes a more serious issue for us than the OPEC deal.
All right, very briefly before I let you go now, Michael, the Nigerian stock market, with this report that we get from the World Bank, what equities, what stocks do you think local investors would want to look into or pry into? Yeah,
I think still the same stories, really. The market has gained significantly this year. It's up about 35, 36%. So at the same time, we haven't seen much activity or much movement in the last couple of months because investors are waiting for macro catalysts. I'm not sure the World Bank report is substantial enough for them to act on because, like I said, it's targeted more at SMEs. So until we see significant changes, for example, there's reports that the president is going to submit the budget to
on Tuesday.
Exactly.
Yeah.
Now, if that's something that happens and if the budget is expedited, that should drive the market and you would then see investors piling into a number of stocks, especially across the big names.
All right, Michael Famoroti, Chief Economist, Vetifa Capital Management Limited. Thank you so much for your insight today on Business Tonight. We appreciate it. Thank you.